Humans are natural pattern seekers. We seek patterns to help us learn and discover new things. It's how our ancestors survived. Unfortunately, this also means we can fool ourselves into finding patterns that aren't there, even in the most unpredictable environments like investing. Investing can be one of the most complex things that we wrestle with. The sheer amount of factors make things hard to predict. There are many biases that can pressure our investment decisions, but the following are some of the most dominant. Remember how we're pattern seekers? Well, this means we're prone to assuming that when something has worked in the recent past, it will continue to do so. Sometimes it does. However, history is filled with investors who believed this would work indefinitely. They didn't look beyond the recent past for patterns. Overconfidence in knowledge and ability causes investors to take more risks than usual. This can occur after recent success and generally plagues men more than women. We tend to get emotional about the things that we like. This is a problem in the investing world. We stick too closely to the investments we prefer or the products that it makes. We are 50% more likely to sell an investment we've made money on as opposed to one where we've lost. Investors often forget that their personal history with an investment has no bearing on how the security itself will perform in the future. Much like a coach wouldn't pick a team of all defensemen, no matter how good they were, your portfolio needs to be diverse and well-balanced. Proper asset allocation takes into account your risk tolerance and investment goals. We're hardwired to gravitate towards what's familiar. Most people's portfolios are heavily skewed to those investments that they know best, usually meaning those within their own country. Your investment returns shouldn't depend on where you live. Doing something that everyone else is doing often feels safer than going in alone, but this can also be a problem. When enough people feel the same way, it often ends badly, like the US housing crisis or the dot-com bubbles. Everyone is affected by investment biases to some extent. It's important that we recognize this and remember to remain as objective and open-minded as possible.